Awesome. Avery Carl, CEO and founder of the Short Term Shop, a real estate team that helps investors focus on short term, which we're going to talk a lot about today. Live from Destin, Florida. New home. How's the new home and office there, Avery?
Yeah, it's awesome. Thanks for having me.
My pleasure. Would love to hear from myself and the audience what you have going on now. I know you specialize in Airbnb and short term investments and stuff, but we'd kind of like to get an idea of everything you have going on right now.
Okay, yeah. So I'm an active investor myself. I have 30 units at the moment, working on a semi 1031 exchange of two properties that I house hacked as of the past 5 years that I meet the requirements to not have to pay capital gains on them. For both selling those were in Nashville, and going to look at exchanging those into a 12 unit this afternoon. I also have a real estate team in 3 markets. We have offices in the Smoky Mountains in Tennessee, here in Destin / Panama City Beach, Florida, and then Gulf Shores, Alabama. And we focus on helping investors acquire short-term or vacation rentals, because that's the way that I started. Is I bought 4 or 5 short-term rentals first, and then used all of that cash flow to then scale into other types of more traditional long-term rental investments.
Very cool. Let's touch on that, starting out in real estate and kind of how you went from 0 to 30 units and now exchanging into 12 more. How did you get started with that?
Well, by accident, kind of. My husband and I moved to Nashville in 2013 from New York City. And at the time, we both just had regular corporate gigs. And I didn't have my real estate license yet at the time. And our real estate agent was really trying to get us to buy in this super hip area of Nashville, because everyone's properties were appreciating really fast. And we didn't want to do that because we were coming from Brooklyn and tired of neighbors. So we bought out in the country. But then we thought, oh, maybe we should get one of those houses in East Nashville. And maybe when we have kids one day, we can sell that house and they can go to college. Real estate investing was like a thing. So we bought what we called a rental house. We didn't even know it was called real estate investing. And that actually ended up being a really, really good one that has cash flowed $1,000 on top of the mortgage ever since we bought it. So we got really lucky for not knowing what we were doing. And after that, we thought, okay, well, we have one more down payment worth of capital. So we really want to do this for real. What can we do? And we started, hang on, can you pause it? I'm going to try and sign out with this.
Yeah, I'm going to edit it. Also, I was going to say, like, every 30 seconds, there's about a 1 second pause. I don't know if it's my internet connection or not. I don't think it is. It looks like mine is full strength. Yeah, it's happened like 3 times where it's like a 1 second, a little like 1 second lag in the recording. I won't know how bad it would affect it until I stop the Zoom meeting and see, but it looks pretty, it's kind of choppy.
All right, I guess we'll see. We'll just keep going and see what happens. Should I record on my end too, just in case?
Sure.
Okay, so we'll do this.
Sure, and what I'll do is I'll record, I'm recording in the Zoom meeting now.
Okay.
What I'll do is I'll record on ScreenFlow too, which is what I use to edit everything.
Okay.
And then I can kind of see, without ending the Zoom meeting, I can go back and see the quality. And it could potentially be my end. I would just have to restart my router. It would take about 5 minutes, but
okay.
Let's see. Record my screen. All right, I'm recording on ScreenFlow right now. I'm just gonna do a quick test real quick to see the quality of it. It seemed all right on there.
Okay, cool.
All right. All right, cool. Do you want to start from, oh, and of course it just jumped a little bit in my audio as soon as I said something. Do you want to start from, and I can edit this whole thing, no problem. Do you want to start from kind of your beginning when I was like, how you got started in getting short-term rentals?
Sure, yeah, I'll start there.
Okay.
Just tell me when to go.
Awesome, go ahead, it's rolling.
Okay, sure. So my husband and I moved to Nashville from New York City back in 2013. And at the time, we both had just regular corporate jobs, no investments or anything like that. And our real estate agent at the time was really trying to push us to buy in this super hipster, really quickly appreciating area of Nashville. And we didn't really want to do that because we were coming from Brooklyn and really sick of neighbors. So we bought something out in the country, but we thought to ourselves, well, you know, we have a little money left over. Maybe we should buy one of these houses. And we didn't know real estate investing was even a thing at the time. So we, quote, bought a rental house that, you know, we just planned to have as some kind of retirement money. But after we bought that first one, which ended up being, it's still our highest performing long-term rental to date. We thought, oh, wow, this could actually be a real business and this could be something that we could scale. So at that point, we started educating ourselves and reading the books and listening to podcasts and learning about real estate investing. And we thought, okay, well, we have one more down payment worth of capital. So how can we best invest this? What can we buy to make the most money the fastest so that we can go buy more quickly? And we landed on doing a short-term rental, but we didn't want to do it in Nashville because the regulations in Nashville are really volatile for Airbnbs. So we went a few hours down the road to the Gatlinburg Pigeon Forge area in the Smoky Mountains, because that's what people do when they go to the Smoky Mountains is they rent a privately owned cabin. So we went and bought a cabin there. Again, didn't have any guidance or really know anyone who was doing anything like that at the time. And that one worked out really well. Scaled that into 5 over the course of about a year. And then our strategy for real estate investing as a whole now has been to take all of that income from short-term rentals that cash flow really, really hard, roll that all into, we've bought more long-term rentals. We have 30 units now. But I mean, you could potentially roll it into more short-terms or, you know, whatever route you want to go. But we just take the short-term rental income and roll that into scaling our portfolio quicker than if we had just invested in traditional long-terms from the get-go.
Very interesting. And I don't know how typical that is, how being the first rental property that you get is your best performing one where cash flows like that. And you're kind of just, you're being rewarded for taking action there as far as your success with that one. And then the rental in the Rocky Mountain or in the Smoky Mountains there. So that's pretty cool to hear. And an interesting strategy, taking the income from the short-term guys, putting those into your traditional longer holds, which is also cool to hear, and want to break that down a little bit. In addition, mainly guys, I want to get from Avery, just her perspective, kind of a state of the union address on where Airbnb is now as kind of like a whole across the country. Being in August right now, COVID has kind of been up and down. Seemed like it was dying down and maybe it's getting a little bit more serious or a little bit more, not regulated, but just more stuff in the news of the last week or so. But I want to hear what kind of systems and processes, Avery, that you had in place when you scaled originally to having 5 more rentals, around that or after that first year, and then what type of systems and processes you have in place now for acquiring and managing the 30 units. Hopefully this afternoon, knock on wood, you're able to have some luck there with the 12 units you're looking at this afternoon.
Yeah. So you want to talk about the COVID stuff first or the systems first?
Yeah, let's go systems and processes
Okay.
first on, how you got the 5 more rentals and scale it up to 30 with both acquisitions and managing those.
Sure. So there is a cool creative financing method with vacation rentals that is only available with vacation rentals. And it's a Fannie Freddie lending product, so nothing crazy. And it's called a vacation home loan, not to be confused with a vacation rental loan. It's called vacation home. And with those, you only have to put down 10%. And the stipulations are just that you can't put any kind of a contract on it, like a lease or a property management contract that gives control of the property to someone else. But you are allowed to rent it per the Fannie Mae guidelines on Airbnb when you're not there. So that is a really good creative way to get into these for just very little money down. So the way that we did it was we did our first one in only my husband's name with a vacation home loan. See, I just did it. Vacation home loan. And then we did our second one in my name only with a 10% down vacation home loan. And then our third one, we had a little bit of an extenuating circumstance. The area had a really bad wildfire that burnt down a lot of rental cabins. And so we wrote a letter to underwriting and said, hey, we want to convert one of these ones that we already own to a traditional rental. Can we get a vacation home loan on this third one? And they actually said yes. So we were able to do it 3 times. But generally, the rule is with Fannie and Freddie, you can have 1 vacation home loan per market. So we kind of, a little bit of a gray area. You probably can't do that anymore because lending has tightened up. That's the way we did it. And then on our last 2 of that round of buying, we bought with a partner. That partner put down the down payment. We handled all the management, and then we split everything 50-50. And that's how we got to those 5 very quickly. And then from there, it was just, pretty straightforward, taking all of this money that we're making and throwing it into more investments. And there are a lot of automation tools that you can use to manage these things. We use IGMS. We just switched over to Your Porter, but those are channel manager platforms. And what they do is they just pull all of your data and information from Airbnb and VRBO and whatever other platforms you're using into one dashboard and kind of syncs it all with each other. Automate some messaging templates, like for example, check-in instructions, check-out instructions, things like that. And then there's also some tools to automate your cleaners, so you don't have to hand call and schedule when the cleaners need to come. It just automatically schedules them on a Google Calendar. So that's really about all it takes, is that and having the apps on your phone for the booking platforms to manage them.
Very cool. And you're primarily, you and your husband are primarily managing those just with the automation tools you have in place?
Yeah. So with short-term rentals, the management fees are a lot higher than just with traditional long-term. So the average is going to be between 20 and 30% of your gross. And, if you've got a property that's grossing $100,000 a year, $30,000 could be the down payment on your next property. So there's definitely a time and place for property managers in short terms, just like there is with anything. But if you're really trying to bootstrap and scale quickly, then it's best to self-manage for sure.
Yeah, that's interesting. So pretty much you're just able to put down 10% and buy these relatively traditional, just with that product loan, the vacation home loan, right?
Right.
Interesting. A lot of people that I know that do Airbnb just across the country more so do the model. I don't know if it's called the arbitrage model or whatever, where you take a lease out on a property and then they have some type of addendum in the contract where they can take that lease and then lease it out to somebody else. Have you done anything like that with your experience, or are you just kind of like taking everything down with the traditional loan?
So we're buying all of our properties. So arbitrage is a good side hustle kind of thing, but to me that's creating a job for yourself. It's not creating wealth for yourself. And then you just also lose a lot of control of the property. Your landlord is still in control. The owner still kind of in control. So I know a lot of people have had a lot of success with that model. It's not a road that I've gone down, but it is something that a lot of people do. And it really only works in big metro areas. So I only invest in short-term rentals in true seasoned vacation rental markets like Destin, Florida, or the Smoky Mountains, where people have always, there's very little hotel presence, and people have always rented privately owned properties on an overnight basis rather than staying in hotels. So in those markets where most of the real estate is a short-term rental of some sort, whether it's a vacation, like a true vacation home for someone, or an investment property, it doesn't make a lot of sense for the owners in those areas to lease it to an arbitrager when they can go just put it with a property manager and make the same money.
Gotcha. Yeah, pros and cons for both. I appreciate your breakdown and philosophy there. Pros and cons to both. Definitely seems like one is more market specific, which may be obvious, but for me, I appreciate you breaking that down. That makes a ton of sense there. So it sounds like you got a nice little portfolio here that you're able to short-term rent out on most of those. I'm curious to hear your opinion, not only on like the vacation markets like you're in Destin or the Smoky Mountains, but kind of short-term rentals, Airbnbs as a whole, where you see it now, how it's been impacted since like March range with COVID and everything like that, and what the future looks like for you.
Sure. So there are 3 types of markets to invest in short-term rentals. There's metro markets, like your Nashville, San Diego, Washington, D.C., places like that. Then there are your big, I call them like luxury vacation markets, but really they're vacation markets, markets that are dependent on tourism that people generally have to fly to. And it's like a big expensive vacation. So Hawaii, Jackson Hole, Aspen, places like that. And then there are regional drive-to vacation rental markets, which, there are tons of throughout the country. And that's what I focus on, are the regional drivable ones, which seem to be the most recession resilient, which I can kind of get to in a minute. But as far as coronavirus, like in March and April, it sucked for everyone in all types of markets. All of our bookings, all of our calendars were wiped clean at the beginning of March when all the shutdowns started, because nobody knew it was going to happen. Our particular properties, we were able to stay in the black because people in drivable big cities that live in small condos like Nashville or Atlanta or Charlotte said, oh, it looks like I'm going to be working from home for 2 months. How about I come rent your place for a few weeks and work from there, so I'm not sitting in my small apartment. So we stayed in the black with a few of those types of bookings. Had it lasted longer, we probably would have had to dip into some cash reserves, but we did not. At the end of April, as things started opening back up in our markets, the tourists just came like screaming back into the market. We would be booked, solid right now anyway, because it's summertime, but because everyone is so like ready to get out of their houses, but they also don't want to get on flights and they don't want to go to big cities because they're still worried about getting sick. We're getting higher prices per night in these drivable markets than we've ever seen, like even on the holidays, just because people don't want to be in a confined space or in a big city or like go to Disney World because they're still worried a little bit. A lot of people are anti-mask or whatever, but they're still worried a little bit about being around a lot of people. So the regional drivable vacation markets are really kind of booming now. I think it's going to take a little longer for the metro markets to come back. And I think the big fly-to vacation rental markets, they're going to come last.
Yeah, that would be like, and kind of just to break that down again, because a lot of good insight there from anybody that's interested. I mean, that affects everything too. I mean, the leading indicator we're just talking about now is more so the short term, of course. But could you give some examples of, again, just to break down, drivable markets, metro markets,
sure,
and the major markets? So like major markets would be like LA, where people most likely do not want to fly there because the population is absolutely insane. I was there in December range, or I was there in December. And I imagine just the population is crazy. Seems case reports and stuff are like out of control. So that, in your opinion, is a good example, Los Angeles, of a major market that's going to take a while to bounce back.
Yeah, so Los Angeles would be a major metro market. So the major metro markets would be areas that have a lot of, people actually live there. There's a lot of jobs in industry. It's not tourism dependent like Los Angeles. Yes, people go there to vacation, but it's not dependent on it. People don't want to go to big cities right now. And then the second type would be the fly to vacation rental market like Hawaii or Disney, Aspen, and then the regional drive to vacation market.
Very cool. Very cool. So tell me a little bit about the clients that you typically work with. I know that you're licensed, of course, probably doing listings, but what do you think what do you think your expertise is with clients that work with you on the investing side?
Okay, sure. So we work only with clients who are looking to buy short-term rentals in the three markets that we're in. We do a lot of buyers, mainly because when I started and when I bought my first one, there were no agents in my market that A, owned any, B, had any idea how to manage them, and C, just could answer any questions about surrounding it whatsoever. They would just say, go see my cousin so-and-so at cabins.com or whatever. I almost said one, but they would just send me to a property manager and say, talk to them. But I didn't want to use a property manager. So I became that agent in that market that could answer those questions and that could teach my clients how to do this. So what we've developed in all of the markets that we're in is a program where if you use us as your buyer agent, then we will help you get set up with your Airbnb and VRBO listings. We'll teach you all the automation tools and the tips and the tricks and the best practices. We'll get you connected with vendors like cleaners and handymen that you need to have to be able to manage remotely, because all of our clients live out of state. Nobody lives in these markets. So what we do is we get our clients pretty much set up for success to be able to manage from their phones from anywhere in the world. I mean, we've got a few expat clients living in China that self-manage. We have deployed military clients in Afghanistan that self-manage. So there's really a big limiting belief with the traditional real estate investing world that feel like, I don't want to do short terms and I don't want to manage them myself because I don't want to get called in the middle of the night all the time. But that's really not something that happens a whole lot. And it can definitely be automated out as well.
Very cool. You have people in China. People in China can do it with your assistance. I think anybody in the States could definitely do it. But that's awesome to hear, and I feel like that's a big missing piece in real estate in general. Kind of like the a more white glove service that helps you with the resources, shows you what's possible, and they're actually doing it themselves, have 30 units, everything like that. So that's cool. That's a cool approach to how you're able to serve your clients and everything like that. It's awesome to hear.
Awesome.
Yeah. I definitely want to get from you or your booking agent, I definitely want to get that list of automation tools for, kind of doing some managing from your phone, so to say, of the Airbnb. That would be awesome. And then to kind of put a bow on this thing, would love to hear any of your best insight or advice for anybody looking to get into STR, Airbnb, vacation home loan you already mentioned as far as kind of like the key piece for how you're getting into these deals. But any other insight or advice that you have for aspiring investors listening on the show?
Yeah. So analysis paralysis is a big thing with the short-term rentals, especially because it's not like with long terms where this is the rent, this is going to be the rent every month, and that's what it is. That's what it is for the market. Here in short terms, anywhere, it's not so, when you're looking at the financials, the past financials of something, just because a manager did a certain number with it does not mean that is what its potential is, even without any rehab. So what I mean by that is, especially in the markets that I'm in, where short-term rentals have been going on for decades and decades, a lot of the property managers are decades and decades old too, and they're not utilizing technology properly. So when they're not using Airbnb and VRBO because that's what's putting them out of business. So their numbers are significantly lower than what they would be if the property were on all the major booking platforms. So a lot of times the rental history numbers that are being presented are grossly underperforming. And a lot of times investors, as they start to look into this, before they get very deep, they just see, oh, this property's been doing 50,000. These are the expenses. The numbers don't work. And they don't take that extra step to see, well, how has it been being managed? Has it been properly utilizing technology, or is it on one of these old school mom and pop jobs? And they just don't take that extra step to see that, well, actually, if you look at all the properties that are similar to this one that are on Airbnb, those have been doing 100,000. Now the numbers do work. Not only do they work, but they work really well. So you just kind of have to dig in a little further than just the spreadsheet with short-term rentals. And a lot of people forget, or they don't take that extra step just because they don't know that that's what they need to do.
Love the breakdown on the specifics of kind of analysis paralysis and also like traditional holds versus short-term rentals. I think you break that down very nicely.
Oh, thank you.
Awesome. So what's the best place to stay in touch with you, or if anybody wants to reach out and potentially work with you that's in one of those 3 markets to start getting their short-term rental portfolio going?
You can find me at my website, theshorttermshop.com. My email and phone numbers that are textable, by the way, are right there on the front page. And yeah, just shoot me a message if you have any interest or questions around it.
Awesome. Appreciate the time, Avery, and hope you guys, if you're interested in short-term rentals, can reach out to Avery on the shorttermshop.com. She's got numbers on there that are textable to reach out to her. And hope you guys have an amazing rest of your day wherever you listen to this.
Awesome. Thanks so much for having me.
My pleasure.